Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific time on Sunday, April 23rd, 2023. And let's start the night off with a couple of tales of private competition. Company versus company, mano y mano. And both stories center around NFTs. Now, first off, we have Yuga Labs, and that's our cover story for tonight. Now, Yuga Labs is the company behind the Bored Ape Yacht Club. Well, a U.S. court has ruled that Ryder Rips and Jeremy Cahan infringed on Yuga Labs trademarks by creating a similar NFT collection. Well, it's not similar, it's pretty much a carbon copy. Now, the court also found that the defendant's use of the Bored Ape Yacht Club marks was not a case of fair use or artistic expression. The court's decision is a significant win for Yuga Labs. For one thing, it protects the company's intellectual property. It prevents others from profiting from their work. But more importantly, it's a victory for the NFT community because it sends a message, and that message, creators will be protected from infringement. Now, in other NFT news, OpenSea Pro has surpassed Blur in daily transaction count. OpenSea Pro is a new platform from OpenSea, and it's more geared towards active traders. Zero fees for a promotional period, and they're offering advanced order types. Now, the launch of OpenSea Pro may have brought some life back to the platform, because OpenSea Pro is now the most popular NFT marketplace. The shift in market share from Blur to OpenSea Pro is likely due to a number of factors. OpenSea Pro offers a number of features that Blur does not. Things like advanced order types. Now, additionally, OpenSea is a more established brand that may serve to give customers more confidence in the platform. The shift in market share is a positive development for the NFT community. It shows that the market is maturing and that users are demanding more from their platforms. It's also a sign that OpenSea is committed to innovation and is investing in its platform to make it the best it can be. And this really just points out the value of competition. And by that, I mean healthy, lawful, above-board, ethical competition, not cheating and backstabbing. Because healthy competition is essential for a thriving economy. Healthy competition drives innovation. It pushes us to be our best. Healthy competition helps us achieve our goals. When we compete, we win automatically because when we compete, we're forced to think outside the box. Because healthy competition forces us to come up with new and better ways of doing things. This can lead to groundbreaking discoveries and inventions that benefit everyone. Competition helps us develop our skills and talents. When we compete, we are forced to grow and learn, becoming more confident and successful in areas of our lives. More importantly, competition helps us build character. Fair and ethical competition teaches us to respect others. It teaches us to work hard for what we want. And these are all valuable lessons that can lead to happy and successful lives. So next time you're feeling competitive, embrace it. It could be the best thing for you. So what do you think? Is our current regulatory environment a safe place for competition? Or is it the case that we avoid competition in the marketplace and avoid working hard for the results that we want? Sound off in the comments below and let me know what you think. And it's getting to be that time of the night. That time where I ask you to like, follow, and subscribe to the podcast. It does make a big difference when trying to grow the show, so I really appreciate it. Now, Sam Bankman-Fried's lawyers have requested a third extension on the enforcement of his revised bail conditions. Apparently, they're having difficulties installing monitoring software on his parents' cell phones. So this monitoring software is supposed to capture a photo of the user every 5 minutes. Now, it came out in an April 19th court hearing in the Southern District of New York. Sam's lawyers, Mark Cohen and Christian Everdell, said that they successfully implemented all of the bail conditions as set forth in the order. All of them, that is, except for monitoring the usage of Sam's parents' cell phones. They said, quote, "We learned recently that the monitoring software installed on the new cell phones that we purchased for Mr. Bankman-Fried's parents cannot, in fact, automatically photograph the device's user every 5 minutes as required by the order." Cohen and Everdell said that they were optimistic that they had found a solution to monitor the cell phones optimistic, but they said that they needed extra time to, quote, conduct further tests on the monitoring software to confirm its capabilities. The legal team wants until April 21st to find a solution. So far, there has been no evidence to suggest one has been found yet. And so, lawyers are requesting that the parents be allowed to continue using their existing cell phones until such a point in time where a solution has been found. Ken Gamble is the executive chairman of private intelligence firm IFW Global. And he said that there's a conflict between the choice of the phone model and the monitoring software being implemented. He said that some newer phone models are unable to install the latest monitoring software. That's due to the inherent security measures on those devices. Now, Gamble emphasized that the latest iPhones, for example, cannot have monitoring software implemented without actually jailbreaking the device first. Now, I do question that. I know of a number of apps that allow you to monitor the phone's usage without requiring the phone to be jailbroken. I'm not sure that matters, though, and I'll get to that in a bit. He said the solution might be alternative cell phones for the parents, phones that are compatible with software. Quote, this will take time. They will have to get to the root of the technical issue, find the solution, potentially make even another application to the court for more time while they find the preferred phone. Because there have been significant concerns over SBF's access to cell phones and the internet in general. Judge Kaplan called them out when he said that Bankman-Fried had access to a lot of electronic devices with a lot of access to the internet, even at his parents' house. The judge warned that there was probable cause to believe that Sam was involved in attempted witness tampering. Now, we found out on March 28th, Sam's parents consented to limit his access to their devices. They also signed affidavits agreeing not to bring prohibited electronic devices into the home. Kaplan had proposed on March 4th that SBF be prohibited from pretty much anything. Smartphones, tablets, computers, any video game platforms or devices that allow chat and voice communication, all of those would have been banned. It proposed Bankman-Fried's communication be limited to, quote, flip phone or other non-smartphone with either no internet capabilities or internet capabilities disabled. Now, frankly, if I were the judge, the problem would have already been solved. Although, honestly, that would just be to establish that the judge will wield the authority of the bench. Tech, especially tech that lets you communicate on the internet, that's everywhere. Your phone, your watch, your tablet, your car, your washing machine, your refrigerator. Internet access is everywhere. Someone with zero technical skill can go to Walmart and buy a burner phone. You don't have to be a genius to figure that out. So I think the court needs to establish that the best effort, good people doing good work, that's enough in this case. Emphasize the monitoring of outcomes and that consequences will happen if Sam is found to be misbehaving in some way. Trying to make it impossible for him to break the rules is just a waste of time and money. Just stand ready to bring the hammer down if and when he breaks the law and call it a day. Patrick Hillman is the chief strategy officer of rival exchange Binance. He has alleged that Sam constantly criticized Binance's CEO before FTX's collapse. The technical term for what Hillman was referring to is called throwing shade. Now, in a recent tweet, Hillman said that Sam was fond of spreading fake rumors about CZ and often called him a, quote, evil Chinese, which doesn't sound very altruistic of Sam, does it? Sounds pretty racist, actually. Now, Hillman's tweet highlighted a report by veteran business writer William Cohen. In that report, the Mooch, Anthony Scaramucci, he discussed the state of his relationship with SBF before FTX bit the dust. Among other things, Scaramucci said that he'd been in on a $1 billion fundraising trip with SBF to the United Arab Emirates shortly before the run-up to the FTX collapse. FTX had been in talks with several investors. They were looking for a $1 billion raise to increase their valuation to $32 billion. Now, reportedly, part of the funds to be raised were supposed to rescue other firms hit by old man crypto winter. During the trip, SBF met with some officials in Dubai, including the UAE Sovereign Wealth Fund. Scaramucci was absent from most of those meetings as he had other business to attend to. However, a colleague eventually informed Scaramucci that SBF had been bad-mouthing CZ during those meetings, which really doesn't match up with the whole happy-go-lucky, brilliant, effective, altruist bazillionaire that we were supposed to believe Sam was. Apparently, there are layers and layers of his deception. I wonder what we'll find out next. I'm sure it'll be a doozy. Emin Gunsirer is the CEO and founder at Ava Labs. He said the crypto space cannot consider itself mature, at least not until its regulators are able to read and audit code. And not legal code. No, he's talking about regulators reading computer code. He was speaking at the annual Cornell Blockchain Conference on Friday. He said regulators are nowhere near that stage now and are quite busy, quote, doing other funny tricks. Crypto in the US has been in the sights of regulators following the FTX collapse. Even so, he said that the most draconian of clampdowns will not crush crypto. And he's on the front line on this one. His company developed the Avalanche blockchain. Suppose we ban crypto altogether, he said. Quote, Generation Z is digital first, and they will not allow this technology to go away. They have seen how amazing these new rails can be. Now, Surer said that several areas need to improve if you want to get the next billion users in the door. Things like scalability, ease of use, and adaptability. When asked about the feasibility of zero-knowledge proofs to reach that scale, he sounded skeptical. He said, quote, this space is often waiting for the next shiny new thing, which I call Godot solutions. That's a reference to Samuel Beckett's absurdist play, Waiting for Godot. The main protagonists are endlessly waiting for the arrival of something that never comes. He said, quote, if something doesn't work today, there's usually a very good reason for that. ZKPs are fantastic tech, but for scalability, they are completely unproven. I have friends who are working on this, and I wish them the best, but if it does work, the latency will always be greater, and I worry about the user experience. United States President Joseph Biden has broken out the ban hammer, forbidding his communications director from handling matters related to any crypto or technology firms he has previously worked with. He still plans to allow him to advise on crypto regulation. So what's going on is White House Communications Director Ben LaBolt will be barred from, quote, participating in legal matters, investigations, or contracts involving cryptocurrency or technology firms he previously represented. Uniswap and venture capital firm Andreessen Horowitz were both former clients of Bully Pulpit Interactive. Now, a public financial disclosure report places LaBolt at BPI. Both firms were on a list of 23 clients paying more than $5,000 a year to the firm. Meta Platforms, Shopify, and West Street were also on that same list. And in the assets and income section, LaBolt disclosed that he holds from $50,000 to $100,000 in Bitcoin and $15,000 to $50,000 in Ethereum. The report said, quote, LaBolt's restrictions are in line with ethics rules followed by other senior White House staff. Now, it was reported that LaBolt will continue to advise the president on regulating cryptocurrency and social media companies. This after Biden signed his executive order on digital assets back on March 9th. That EO didn't specify any regulatory actions, but it did outline a process that will involve 16 high officials. First up, the task of producing an elaborate series of reports. Yay, reports. These reports are due at intervals ranging from 90 days to over a year from the publication of the EO. So this executive order has gotten attention from government officials and industry leaders alike. Senator Cynthia Lummis of Wyoming commented on the executive order. She said, quote, it's great to see the Biden administration's growing interest in digital assets. Ari Redborn is the head of legal and government affairs for TRM Labs. He said he was, quote, expecting certain things, and the positive tone was not necessarily one of them. The Abu Dhabi Global Market, or ADGM, is looking for feedback on its proposed legislative framework for distributed ledger technology, DLT. This framework covers disclosures, liquidation, and governance structures for DLT projects. The ADGM is an international finance center in the UAE. It has a bespoke licensing regime for virtual asset service providers supervised by its financial regulator. The proposed DLT Foundations Regulations 2023 aims to set up a tailored legislative framework, one that considers, quote, features of foundations that might be attractive to developers of DLT projects. That does include decentralized autonomous organizations, DAOs being the favored governance structure for decentralized initiatives. They also cover reporting, disclosures, and publication, as well as insolvency and liquidation measures. Quote, "This consultation paper is of interest to any persons operating or planning DLT projects, persons engaging in digital asset-related activities, and their legal advisors, as well as DLT industry participants, associations, and stakeholders. The Abu Dhabi and Dubai Emirates of the UAE have been working hard to establish regulations that could attract blockchain and crypto firms to the region. Dubai enacted a crypto regulatory framework earlier this year, and the UAE unveiled federal licensing requirements for virtual asset service providers last week. Back in February, Abu Dhabi kicked off a $2 billion initiative to support Web3 projects. The deadline for comments on the proposed framework is May 12th. And that brings us to our last story for tonight. China and Singapore set up a task force to deepen bilateral cooperation in green and transition finance. This move is said to be aimed at facilitating greater public-private sector collaboration for a low-carbon future in the region. The Monetary Authority of Singapore announced that they were working with the People's Bank of China to establish the China-Singapore Green Finance Task Force, or GFTF. With this task force, they expect to work together to develop a set of financial standards, products, technologies, and definitions to lower carbon footprints. According to their Assistant Managing Director and Chief Sustainability Officer, Gillian Tan, public-private participants from China and Singapore will collaborate on, quote, concrete initiatives that will catalyze capital flows to support a credible and inclusive transition to a low-carbon future for our countries and the region. The GFTF will allow the authority and the bank to find a common ground as far as definitions with respect to each other's existing transition activities. The countries can use this task force to strengthen sustainability bond connectivity, including two-way access to green and transition bond products. Their technology initiative will see the involvement of Metaverse Green Exchange. They're a licensed crypto exchange from Singapore. And there's the Beijing Green Exchange, a Beijing municipal government-approved company, working together to facilitate sustainable finance adoption. The two companies are also going to pilot digital green bonds with carbon credits. Chinese banks are reportedly opening bank accounts for regulated crypto companies. Several banks will be acting as payment layer for the crypto firms. Chinese state-owned Bank of Communications is in talks to open accounts for regulated companies. That said, we've talked about ZA Bank before. They're Hong Kong's largest virtual bank. They're going to act as the settlement bank for crypto companies, or according to a Wall Street Journal report. This comes as China is gradually easing its stance on cryptocurrencies. So back in September of 2021, the Chinese government banned all cryptocurrency trading and mining activities. But if you look at recent months, there have been signs that they are warming up to the idea of crypto. In February, they issued a paper on the potential benefits of using blockchain technology in the financial system. Some see this as a positive development for the industry. It's expected to make it easier for crypto companies to operate in China. It could also boost the development of the Chinese crypto market. Meanwhile, the US government is fully intent on choking the life out of its own financial future and the financial futures of their children. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, maybe leave a rating or a review. And in the meantime, we'll see you tomorrow night.